All right, let's start off with the good news. The dollar has formed a swing, so we've got another spot for potential top in the dollar, and perhaps let me pull up the euro here. Perhaps a bottom in the euro. The cycle's pretty long. We're 30 plus days here, and we've got a swing low. And with the panic in the markets, um, people aren't rushing into the dollar as protection. So that's the good news. And then let's go to gold. So if the euro is bottomed and the dollar is topped, then it would be another chance for gold to break free of this suppression that's been keeping it locked below the 50-day moving average. Let me put that in. All right, so you can see gold has just been repeatedly bumping its head up against the 50-day moving average, and at some point, I've got to think that gold is going to break above that. And the caveat, of course, is that we could still get a move down um, and break below this August low, but that's not the way I'm leaning anyway. I'm thinking that the euro is going to complete a daily cycle low here. The dollar is going to top the intermediate dollar cycle, is going to left translate, and then gold is going to give us a strong rally into the end of the year. So, um, again, if you're willing to pick a direction and just hang on, I think eventually we'll be done with this sideways back and forth, and we'll pick a direction. My bet is that it's going to be to the upside. So, um, again, if you're brave enough to just hang on to silver or miners, then I'm my bet is that the we're going to come out of this chop and go to the upside. Um, Definitely a plus today is that the mining stocks reversed their earlier weakness and are trading back up. So I'm going to take that as a sign that gold is preparing to move to the upside and finally break break free of that cap at the 50-day moving average. And now for the bad news. Um, Clearly missed it by a mile yesterday. I assumed that the swing that we had yesterday was possibly either going to mark a shortened ICL or it was the start of the B wave bounce that would then move down and we'd get our undercut into the final intermediate cycle low. Clearly, um, like I said, missed that one by a mile. We've got our recognition day today. We've come down. We have broken the intermediate trend line. So at this point, we have done enough so that the intermediate cycle can bottom at any time now. We've the S&P bottom or ended the day right on this 38% retracement. So a potential spot for a bottom. I will get the McClellan oscillator figures later today. If we did make a lower low below 70, and I think we did, then um, we potentially still have the opportunity for uh, a B wave bounce and then another lower low to complete the intermediate cycle decline. Um, we've got, obviously we've got a recognition day today here. You can see the recognition day back in February was pretty close to the bottom. The next day we opened down, ended up with a big rally, then two more down days into the bottom. So we're pretty close. Um, this again, let me stress, this is not the end of the bull market. I don't even think it's the end of the 4-year cycle. This intermediate cycle is extremely right translated, as we've gone over before. These really extremely right translated cycles can have a tendency to crash at the very end. But this is not going to be any different than this. And you can see that this did not stop the bull market. We've come back up and made higher highs, and in the NASDAQ, much higher highs. And I think this is going to set up the move to 10,000 in the NASDAQ. And the reason being is I think the rally out of this bottom, when it occurs, is going to be uh, many times more aggressive than what we came out of this, simply because, and let me widen this chart out, um, because 2018 has been a year of just sideways. And as we've seen many times before, these long sideways markets are what generate the big trending move. So you can see we had a really long sideways market and the move into the 4-year cycle low. And then that generated this big trending move out of the elections. So I think that this long sideways market in 2018 is going to generate, once this ICL is done, is going to generate the big trending move that's going to take the NASDAQ to 10,000, or at least close to 10,000 before the 4-year cycle tops. Okay, and here's some more potential good news anyway. At this top, and remember, markets operate like a pendulum, and sentiment, I think, is the same way. But at this top, sentiment didn't really get all that bullish. So the pendulum didn't really swing that far in the bullish direction. So I don't think it really has to swing that far in the bearish direction for us to get a bottom. I'm doing this video before I get today's data. When I get it, I'll post it in the comment section. But I got to think that after today's big move, the dumb money confidence is going to be down here near an extreme. And once the dumb money gets extremely bearish, then we can start looking for final intermediate cycle low, and then the beginning of the next intermediate rally. And we got the same thing here with the intermediate optics. Again, at the top, sentiment really didn't get all that bullish, so I don't think we have to swing to a massive degree to the downside before this intermediate cycle bottoms. What I'm really interested in is a potential aggressive portfolio trade here in the Qs. Once I think we've got some kind of a bottom, we're going to recover all this, and I think we're going to be well above 200 on the Qs before this 4-year cycle tops. So I think we have some really good potential for an aggressive portfolio trade, but I'm definitely gonna wait for at least a swing before I give this a shot. All right, so I know it's easy to panic when we get into one of these intermediate cycle lows, especially if we mistime this, which I did very badly yesterday. Like I said, the swing just it came late enough in the daily cycle to where I took a chance that might be the bottom, and that was just absolutely the wrong call. But ICLs always end, and we're still in a bull market, and bull markets go on to make higher highs. So this, even though while we're in it, it's no different than this, or this intermediate cycle low, or this one, or the one after the election or during the elections, the Brexit. In real time, the 4-year cycle low back here in 2016 was about as scary as they come. But as we can see, this was not the end of the bull market, and this is not the end of the bull market either. It's just a much needed profit taking event that was held off longer than it should have been. The S&P should have followed the Russell down, and we would have had a much more normal intermediate cycle low, and of course one that would have been much easier to trade. But the Fed needed the market at or near the all-time highs for the September rate hike, and so we get a market that's been propped up for far too long, and then the intermediate cycle low has to compress into a very short time frame, and we end up with one of these things. But this is not going to stop the bull market, and it's not going to stop the 4-year cycle. We'll get a bottom here in the next few days, and then I believe that this consolidation year is going to generate another very strong trending year, similar to 2017, or maybe even more aggressive in 2019. And I think we're going to get the top to our 4-year cycle in sometime in 2019, maybe mid 2019. And I think we're going to test or at least get pretty close to 10,000 on the NASDAQ before that 4-year cycle tops. And like I said, I'll post the McClellan oscillator chart in the comments section once it's published, and I'll also post the updated sentiment charts once those are updated here in an hour or two.